Morning, Steve Free in Chicago with the morning grain comments. Well, overnight prices are a little bit better in beans and wheat, and corn's about unchanged to also a little bit better. Yesterday we saw a nice short covering rally led by the beans and wheat. Most of that was linked in the wheat market at least to the lower US dollar, and that's helping a lot of commodity prices. The dollar continues to sink lower. Q1 US GDP data didn't help the situation, all being lower than expected. We saw open interest drop quite a bit in corn and beans overnight. And as far as the deliveries were concerned on the May contract, we had 12 oil, 296 Kansas City wheat, 184 Chicago wheat, and 1 soybean. So no corn and no meal deliveries at this time. Cash markets continue to firm on the lack of farmers selling here in the United States and in Argentina. Beans rallied yesterday because of the port strike that was going on. Both labor unions that are striking in Argentina are suggesting they will continue to strike until their wage increase demands are met. There's already talk that the president of Argentina may invoke some kind of back to work order to get them back to working. So we'll kind of watch that. Technically speaking, July beans are right back up against almost that $10 price level. The fundamentals don't support that, but the news in the market on short covering is offering us to get back to that $10 price level. China soybean futures are sharply higher. There is talk that their feed usage demand is improving, and that might be helping their nearby soybean futures market. There's a lot of beans on the water heading to China. Weekly export sales this week, I think for the wheat market, we're expecting somewhere between 100 and 300,000 tons. Last week, old crop was 397, new crop was 127. Corn sales are expected somewhere between 5 and 700,000 tons. Last week was 868. And bean sales somewhere between 50 and 500,000 tons. Last week, old crop was 102, and new crop was 8,000 tons. Besides that, Russia is talking about dropping their wheat export tax before June 1st, and world wheat prices continue to be a pretty steep discount to U.S. Next week, the annual Kansas wheat tour is expected to go through Kansas and estimate the winter wheat crop estimate. USDA puts out their first estimate on May 12th. I think most of the market's looking for a crop around 1.5 billion bushels. And that would be up from last year. Weather-wise, in the Midwest, looks like 4 to 5 more days of open planting weather for farmers. We get some rains early next week. The extended 2-week outlook calls for normal to above temperatures and normal to above rainfall for much of the Midwest. So a little bit higher trade overnight, and we'll see how we go into the month of May, at where prices are and where they're going to be going. Trade's still a little bit negative to the beans, and feel that the corn market might be oversold. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.